Imagine depositing $1,000 into a bank. You think the bank keeps your money safe, waiting for you to withdraw it later. But something strange happens. That same $1,000 can suddenly turn into $5,000, $10,000, sometimes even more. No printing press, no gold, just numbers on a screen. So how does this happen? How can banks create money out of what looks like nothing? And why do most people never learn this? To understand the modern economy, you first have to understand how money is actually created. The big misunderstanding. Most people believe banks work like storage lockers. You deposit money, the bank protects it, then someone else borrows the same money. But modern banking doesn't work like that. Banks don't just move money. They create new money through lending. And this system is called fractional reserve banking. It's one of the most important and misunderstood systems in the global economy. How money multiplies. Let's say you deposit $1,000 in a bank. The bank does not keep all $1,000 in the vault. Instead, it keeps a small percentage as reserves. Let's say 10%. That means the bank keeps $100. The remaining $900 can be loaned out. Now something interesting happens. The person who borrowed that $900 spends it, and the person receiving that money deposits it into another bank. Now the second bank also keeps 10% and lends out the rest, $810. Then that money gets deposited again, then loaned again, and again, and again. Through this cycle, your original $1,000 deposit can create up to $10,000 in total money in the system. No physical cash was printed, but the amount of money in the economy increased. Why the system exists. This system exists for a reason. Without lending, economies grow slowly. Loans allow people to start businesses, buy homes, invest in education, build infrastructure. Imagine if banks could only lend money they physically held. Credit would be extremely limited. Economic growth would slow dramatically. Fractional banking allows money to move faster through the economy, and that fuels growth. But it also introduces risk. What happens during a bank run? Now imagine something scary. Everyone suddenly wants their money back at the same time. But remember, banks only keep a small portion of deposits in reserves. If too many people withdraw at once, the bank can run out of cash. This is called a bank run, and it has happened many times in history. During the Great Depression, thousands of banks collapsed after customers rushed to withdraw money. Because the system depends on trust, when trust disappears, the system breaks. How central banks control money. To stabilize the system, central banks exist. In the United States, this role belongs to the Federal Reserve. Central banks control money supply by adjusting interest rates, regulating reserves, providing emergency liquidity. If banks face shortages, the central bank can lend money to them. This prevents panic from spreading through the financial system. But it also gives central banks enormous influence over the economy. When they change interest rates, borrowing changes, spending changes, investing changes. The entire economic system responds. The power of money creation. Today, most of the money in modern economies is not printed by governments. It is created by banks through lending. In fact, economists estimate that over 90% of money exists as digital bank deposits, not cash, just numbers and accounts, which means the banking system doesn't just store wealth, it shapes the entire economy. Who gets loans, who can buy homes, which businesses grow, which ones fail. All of it connects back to the creation of money. Understanding this system changes how you see money. Banks are not just vaults. They are engines that expand and contract the money supply. When lending grows, economies expand. When lending slows, economies shrink. That's why banking crises often trigger recessions, because when credit stops, growth stops. So the next time you walk past a bank, remember this. It isn't just storing money. It's quietly creating the money that powers the modern world.